All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market pushing on higher a little bit. If you're looking at the S&P, well, it's now red. Sorry, just switched. But Nasdaq down just under 1%. Small caps pulling on back after a little mini breakout yesterday. But it's one of those days, and one of those days we don't see very often, where there are significantly more advancers than decliners in the market. You know, there are 313 advancers versus 188 decliners on the S&P. And typically the market would be up 7, 8, 9, 10 points, somewhere in that area with this type of distribution. But the stocks that are down, they're down a lot more than what the stocks that are up. When you take a look at, Google, you take a look at Corning, you take a look at GM and MGM, and, just some of these other names out there, you can kind of visually see it here. But, some of these stocks that are down, are down significantly more than some that are up. Seagate's one exception there. But overall, it's kind of same old for the market here today. There's not a lot of, massive change that's happening with most stocks. The biggest movers are happening around some sort of news or earnings, except for, something like an Alcoa, which has that kind of technical breakdown action, really kind of coming into play. We have National Oilwell Varco, which may go the same way as Alcoa. It's almost the exact same chart, exact same principles, and looking to push on lower here. We still have the same type of participation rate in terms of new highs versus new lows that we have had. Here today there are more new highs in the market today than new lows, but we're not talking about it going into any real serious bullish territory here with it. So market vibe has not changed today. It's the same as what it's been. It's a 2. It's still neutral. The IWM is doing a pretty decent job of holding yesterday's kind of mini breakout. Tried to kind of fail here this morning, but snap back on up, back above that 158 level. Not uncommon to see that, but definitely not the easiest thing to hold and to trade. But not a lot of volume, not a lot of not too much carrying on this last day of the month. We will be hit with a lot of economic data. The Fed tomorrow, more earnings, Apple after the bell. So market has a lot to digest here in the coming days. And I do think it'll be a critical time here for the market. But every once in a while in the market, we get a couple stocks that become the tell. That become the, hey, you know what? If you're looking for something, we'll just watch these two stocks. And it doesn't happen always. We've seen it before with Apple. We've seen it before with Caterpillar. When we get some of this action, I talk about it. But right now, there are two stocks in the market that to me are the absolute tells. And as long as they hold up, as long as they continue to hold up, the market's bullish. Yeah, they may pull back a little bit, but as long as they hold, their trends, the market's still bullish. Those two stocks are Bank of America, BAC, which was not the best bank earnings report. JP Morgan was. JP Morgan was by far and away the better report over Bank of America. But Bank of America has broken on out here, pushed on higher ahead of the Fed, looking to push into new highs above 31 and a half. If Bank of America continues to hold up, and by hold up I mean stay above its 7-day moving average, the market's still bullish. Bank of America pulls below its 7-day moving average, we're probably seeing some change. Big picture. I think the same could be said for Microsoft. This so far has been by far the best tech earnings report. You compare it to Amazon, you compare it to Google, you compare it to Intel, you compare it to Micron, you compare it to Western Digital today. Microsoft by far and away the best that the market has seen. Gapped up here to 130, deserves the mark. We talked about the mark. Yeah, is the stock expensive here? Yeah, it is. But it by far deserves the valuation that it has right here after that earnings report. If they don't sell Microsoft, if they don't sell Bank of America, we're not talking about a market that's breaking down. We're talking about a market that's waffling a little bit. If we see Microsoft and Bank of America both break down, those are two of the best charts out there, two of the stocks that fund managers have to own. And we start to see those two stocks sell, the market's changing. So far today, no real change. But if you're just looking at two stocks, you want to say, you know what, let's just keep this simple. Let's just follow two stocks. As long as these two stocks hold up, market's going to remain bullish. Yes, there will be the Alcoas. There will be the National Oil Well Varcos that break on down, that push into new lows. We will see that. Right, I would not even be surprised if we see Arconic, gap down tomorrow and sell off. In fact, Arconic is on my notes to sell or to buy puts if it gaps down tomorrow. But we have U.S. Steel going and pushing into new lows. There are going to be plenty of stocks that go this way, but they're not going to be the ones driving the market. Bank of America, Microsoft, those will be the tell. I don't even think it'll be Apple. We'll wake up tomorrow and Apple will be down or up. It'll probably move $10, $15. And the market's going to oscillate with that. But if Apple's down big and Microsoft's holding up, bulls are still in charge. If Apple's up big and Microsoft's getting sold, something's changing. Something's going on. And so, when we look at things, on aggregate, we're not seeing a lot of market internals, moving. But when you look at incentives, investor incentives, you look at the dynamics that are coming into this, that are in this market right now, we're going to go to a lower volume period. We're going to go to a period where certain stocks may matter a heck of a lot more than what they have here of late. I was asked earlier today about Apple and, higher or lower on earnings. And I said my gut feels kind of lower, but it's not good enough to want to play it. Meaning I have no desire to play Apple on earnings here. And I say gut feel lower. And maybe that's not me picking direction as much as I think the potential drop in Apple is greater than the potential pop. What they have to report to drop $15, they could have just a ho-hum average report and drop $15. They're going to have an absolute blowout report to gap up $15. And so I look at it and I go, okay, path of least resistance, probably lower. But, it's Apple. They could definitely have that kind of blowout report. If we look at, the market cap here for them, right, we're talking about Microsoft at a $1 trillion market cap, just shy of that right now. It traded briefly in that $1 trillion market cap region. But here's Apple. Apple doesn't have to move that much higher. 3% higher on earnings to go up into the $1 trillion market cap area. So really doesn't need that big of a move to get there. We're not talking about a stock that's ultra expensive. And so it definitely can get there, definitely can move on higher. But to me, it's kind of the Google situation. Amazon, this was a really good report. Did they really chase Amazon up? No, not at all. Right? They're not selling it, but they're not chasing it up in a big way. Google, there's some good in Google's report, right? We talked about Google's report. It makes sense why they're down with the revenue trend turning, but it's still, one of the best revenue growth stories in the market. They sold this thing off $100. And so I just look at Apple and I go, okay, you know what? If they miss, they will get sold very hard. But I'm not convinced they miss. I'm not convinced they miss. It almost, it's just one of those stories that, always hard to bet against. But, if you look at what is expected, we're going to be talking about year-over-year revenue declines, right? I mean, when has Apple had a year-over-year revenue decline of 5%? right? I mean, that's what's there, and the next quarter is projected for a revenue decline, and the next quarter is projected for a revenue decline, and the quarter after that for a revenue equal. It's 4 quarters away from being a revenue increase, and that's not a big revenue increase. So, market's going to have to deal with that. Market's going to have to figure out how to digest that from, one of the biggest companies out there just not having real revenue growth. And the way they justify it is by looking at the earnings growth. But, if you look at the earnings growth, 7%, single digits, that's not what Apple has been. And so the market's going to have to digest something a little bit different here from Apple. It has, definitely given it the benefit of the doubt on this run up here. But they have not pushed it back up to the highs that were September and October. And a lot of that because of these comparables. They're not pretty. They're not, they're not great numbers that make you look and say, hey, this is a stock that's on a mission. This is a stock that has some fire under it. It's definitely not a Microsoft situation here. Okay, so Bank of America, Microsoft, the two best tells here, in the market for what's happening, what's going on. Those two hold up. We're still talking about the bulls in charge. These things break down. We are talking about some sort of, game-changing action out there in the market. All right. Thanks for hopping on. Tomorrow we'll get started with our 30 indicators in May, and we'll look to do that. Around 11:30 Eastern. I'll probably jump on a video before the market opens tomorrow, since not running the challenge test anymore, just kind of prepping up for the new challenge upcoming, and so we'll jump on, talk about some of the market direction, talk about Apple earnings, some of the things that can be expected with some of the data that we see tomorrow morning, and so we'll talk to you then. Have yourselves a great one. Take care.